Welcome back. It's Market Day Report. I'm Tony St. James. It's a Thursday. How about we jump in with both feet into the market pool, and we'll start with the corn market. Now, we did see lower trading overnight, but as we open up this morning, September 388, it's 2.5 lower. The December at 409.5, trading 3.25 lower. Soybean trade following that same trend, November 10-14, it's down 7.5. But what is this, like a 30-cent rally, even at this lower price here this morning? Still about a 30-cent or so rally off of where we were, just 10 sessions ago or less. And the wheat market, we'll start with Chicago. Up 6 consecutive sessions, but lower as we start this morning. September 557 off 8.25. July 613, it's off 4 3/4. Hard red has been up 7 straight sessions, and the September starts that way. 586 up 3/4 of a penny, and July at 612.25, down 3 3/4. Spring wheat 22 3/4 higher on September. December, half penny higher at 624. Finally, the cotton market is in lower territory, but just barely, off 1 point, 69.80. Tommy Grisafi's with Advanced Trading. And Tommy, we often talk about grains and oilseeds here, but what about those outside markets and the 2s and 10s? What's happening there?
I feel like you're saying bad words, 2s and 10s. They are at the exact same yield. Absolutely amazing. When the 2-year yield crosses higher than the 10-year yield, there is extremely high probability of going into a recession or having some economic turbulence. We've been at that way for a long time. Long time being, I can't even remember, like 9 months, a year. I have to fact check on that, and I'm sure one of our viewers or listeners will. I know Scott will cover this a lot. For the first time in a long time, the 10-year yield is just a tiny bit higher than the 2-year yield. All eyes on the outside markets. We've had some volatility over there lately. When we talk about that volatility in the outside markets, believe it or not, to the folks watching and listening, it affects our markets, the grains, the cattle, and everything else. Earlier, late last week, we had was it this week? Last week, I lose track. We had a big down day in stocks, and we had a little volatility spike. And when that volatility spiked, we actually notice that grains and commodities caught a bid. We're flirting with gold real close to all-time highs. Looking at gold here at $25.50, a handsome price for anyone who has a couple bars hidden in a drawer. But what we do, grains, all eyes on corn, wheat, and beans. You're right. We've had a heck of a rally, and we're coming right into harvest. A couple things to watch. That Mississippi River level's low. And the only way the Mississippi River level could be low is that it hasn't rained a lot at the end of August. We need those good finishing rains at the end of August to really make those soybeans nice and plump, get that yield up there. Some people are starting to say, now these people are maybe someone who forgot to sell, that, it's a dry August and we're not finishing as well as we're taking the top end off. Combines are starting to roll in southern states and moving our way up. We're going to have a lot of yield talk. And whether we have a 182 yield, a 180, a 179, we have a crop out there. Feel bad for our friends in the great state of Ohio. Drought monitor map just came out a few minutes ago. That eastern part of the belt lighten up. Not good. It's really not good to have bad prices and then lose all that yield here at the end of August. With that, you know what? I bet you they're saying, Tony, we need to take a commercial break and get right back, my friend.
Well, hey, since you say that, let's just do it. And we'll come back and we'll talk cattle. Can't wait to pick your mind on what's happening with livestock futures. Tommy Grisafi joins us as Market Day Report continues in a moment. It's Market Day Report. It's a Thursday. We're glad you're with us. Okay, we're going to get back to Tommy Grisafi in just a moment, but first let's start with where we're trading live cattle futures. This morning in lower territory, October off $1.02, 178.20. The December at 177.85, down 105. What about feeders? 67 lower. September 238.95. October 236.12. It's down $1.32. Look at it this week. Live cattle down 2.5%, feeders down 1.6%, and just slightly lower, fractionally lower for the hogs. And we're 75 lower to start the morning for October at 80.82. September, $72 a hundredweight, trading 70 lower. Before we went to break, Tommy Grisafi with Advanced Trading talking about that drought monitor rolling out. And Tommy, we're kind of in the place we are right now with cattle because of drought a few years ago causing culling of the herd. So definitely watching that drought monitor will be important moving forward.
Yeah, absolutely. And we've had several droughts. A lot of times you think of the drought down in the Texas area panhandle, but then back in 21, I believe we had a heck of a drought in the northern plains where we start off hot and dry, and you notice these cattle move. So you talk about cattle moving from the south up out west or the north down, out to these finishing yards. Cattle are interesting because it's we don't only just grow one crop of corn or beans here in the world. We're growing multiple crops, and when you look at from start to finish, it's a big long process. And you have our very own Chris Swift has taught me so much about cattle in that process and whether all the parts that go into it. But I know this: you just can't wake up one day and say, we need more cattle. It doesn't work like that. Maybe in the laboratory on that fake meat stuff that's not doing too well, they could make more fake meat. I hear someone giggling behind you. We catch them off guard once in a while. But with that, absolute respect for the cattlemen and women out there. We still need to stay tight with our risk management, LRP insurance, futures, options, puts, calls, whatever works for you. Stay on it. Hogs scare me. They're down 75 a little bit. I'm telling you, I was out this weekend. I did my part. I woke up early, made 3 pounds of bacon for all the kids that were over and stuff. And who doesn't like bacon? If you don't like bacon, I don't like you. Back to you, my friend.
Well, and the next question would have been, did you ever trade one of the pork belly contracts before they closed that down?
Never in my life have I traded a pork belly. Closest thing I've ever gotten to it is watching the movies during Christmas. No, the old pork bellies, Eddie Murphy and them. But the contracts changed, and there's still a reason to use these contracts. I will say this, and this is no disrespect to the CME or the people who trade feeder cattle, live cattle, and hogs. There's nothing as liquid as the Board of Trade corn contract. I mean, I could click a mouse right now. I could pull up a ticket. You said Tommy saw 1,000 corn. I could do it easily. The market would absorb it. Our livestock contracts aren't as robust. I wish we had greater volume in the futures and options at the CME. And with this new found LRP insurance, I actually think we're losing some of that liquidity as people go buying that government put, that LRP insurance. So with that, hey, real quick before we go on break, crude oil, folks, I know you're coming up to harvest. Crude oil is at $69. You're going to have a harvest. You're going to consume a ton of fuel. Today's a great day to call the fuel guy or gal and lock in those fuel needs. We always talk about buying stuff low and selling it high. Crude oil on sale. Red diesel across farmland, about $2.50 a gallon. Back to you, sir.
Perfect. Tommy Grisafi, Advanced Trading. And yeah, here's can we bring up the crude oil real quick? The table on crude oil is, again, moving higher here in morning trade. The October up 35 and November up 29. But WTI really near 8-month lows, and that on the idea of sluggish demand. So hate to throw a curveball into what we're doing this morning, but we are watching this West Texas Intermediate, and we're set to get in the next hour the EIA stocks report for crude oil, and we'll see the changes. That market will react.